Good morning, this is Robert Kaars Sijpesteijn bringing you this morning's market update. Looking to the US, we saw markets rally upwards on the last day of trading last week. The US 500 added 29 points to close on 1,863.58. The US Tech 100 gained 42 points to close on 4,016.18. And the Wall Street climbed 260 points to close on 15,963. Despite the late week rally, the index has suffered a week-long bashing. A large reason for this is China's trade contraction. China's trade contracted significantly more than economists had expected in January, as the country's economy continued to suffer from weak global demand and a slowdown at home. Exports fell 11.2% year-on-year in dollar terms, compared with forecasts for a decrease of 3.6%. While imports slid 18.8% against expectations of a 1.8% fall, according to government data released on Monday. The effects of a decreased global demand has been felt by the shipping market when AP Møller-Maersk warned this week that the Danish conglomerate was enduring business conditions in container shipping markedly worse than during the 2008 financial crisis. It appeared to fit into a wider pattern. Maersk is the world's largest container shipping company, and it is the latest in a series of companies to have made gloomy announcements in recent weeks about economic conditions, including the weak state of global trade. Maersk said on Wednesday that it earned significantly lower prices for moving containers during 2015 than 2014, and the group reported a $2.5 billion net loss for the fourth quarter of last year. Despite the poor statistics coming out of China, the country's currency has enjoyed its biggest one-day gain in more than a decade as onshore traders returned from the Lunar New Year holiday to supportive comments from the central bank and a declining dollar. The renminbi jumped 1.2% in mainland late afternoon trading, a bigger move than on any day since the People's Bank of China began to liberalize the currency in July 2005. Looking into commodities, Brent crude rallied slightly on Friday, adding $1.65 to close on $32.78 a barrel. Gold, however, came off its high of $1,263.50, dropping $2.30 to close the week on $1,238.20. Moving to Europe, the Germany 30 added 110 points to close on 8,999.1, and the UK 100 gained 32 points to close on 5,732.9. In today's corporate news, HSBC shares rose in Hong Kong trading on the bank's decision to remain headquartered in the UK. Shell boss Ben van Beurden has claimed a significant moment as the £35 billion takeover of BG Group goes through. And Sir John Vickers has warned that the Bank of England's buffers are not enough. Today's economic data in focus at 10 a.m. in Europe, the trade balance for December is released, and at 2 o'clock the ECB President Draghi will give a speech. That's all for this morning's market update. Thank you and goodbye.